Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 110, NASDAQ off 54, S&P's off 18.5, gold contract flat at $1,217 an ounce. Silver down 8 cents at $17.75 an ounce. Platinum down 6 at $1,329 an ounce. Copper off 5 pennies at $3.04 a pound. Light sweet crude down 89 cents at $91.52 a barrel. Bonds, we have the 10-year up 10 ticks at 124.10. 30-year up 7 at 136.26. King dollar flat at 84.86. The euro up 8 at 128, and the yen down 22 at 108.82. My phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, we're at 1994. 1994, of course, brings you back inside the range of 2011. The lower range, folks, is 1991.39. Now, what's really intriguing here is this. So, Friday, Alibaba goes public. Apple comes out with their iPhone 6. Triple witching, option expiration, right? So, the NYSE did 1.8 billion shares. The NASDAQ did 3.1. The real question here is that a blow-off top, which is really a trip in itself, because the volume certainly came in there for a blow-off top. The euphoria wasn't as much as normally what a blow-off top does, you know, but we'll see where this baby shakes out. S&P right now, you get it at 1994. It'll say quite a bit when we get down to this September 15th level at 1978. You know, you break that level with volume, then you get action. Right now, the SPY, we have with the SPY, the SPY, the SPY is 83 million today. She's going into 116 million. Bottom line is that what I expect you're going to see coming into these closes is that you're going to see more selling coming into the close. Dow Industrials. Now, what's really interesting about the Dow is, you know, you're down 110 bucks. But check this out. Because the Dow is at such higher numbers right now, that is only 0.6% down. You know, because we're dealing with a 17,000 number, okay? So, the NASDAQ is getting whacked. That's down 1.1%, almost 1.2, but yet you can see that's down 53. The S&Ps are off 0.8%. That's down 17. Because we're at such higher numbers, you don't need a big percentage to have the market down in the perception that you're down some decent numbers. We go over to the NASDAQ composite. You take a look at the composite. What you have is this. Composite is down 53 bucks. Right now, we are at 45.26. Now, the swing low from last week was the 44.90. I suspect we're going to go after that until you get back inside the lower range, which is 44.85. Then you get some destruction going inside the NASDAQ. We go take a look at the NDX 100. What we have with the NDX 100 is this. NDX 100 is down 42 bucks out here today. If we take a look at the 3 Qs inside that correlation, what you have with the 3 Qs is that that's down with 35 million shares. We're going to be going after that lowest swing point. I suspect we're going to go after that tomorrow, which is 98.05. Right now, you're at 98.90. Small caps are the leaders. The small caps are leading the market down. Right now, we've done 35 million shares. Your B point on that small cap is 51 million. Now, it's not going to be an ABC. Well, it's not an ABC down in the correlation of what the definition is. What you do have is that the small caps couldn't bounce at all when the S&P was at the highs, NASDAQ was at the highs, Dow was at the highs. The small caps want to go after, if we look at the IWM, we're at 112.44. That's going after 109. I expect you're going to go after this 107.44. Gold contract. We go over to gold. We take a look at gold. What you have with gold is this. Gold has traded to a price point today of 12.08. You're at 12.16 right now. If you take a look at this correlation, the correlation goes that you're coming into the not only the the two last lows that were made in gold, and you're coming into them with dramatically lighter volume. Your first low that was made in gold after almost the 1.3, well, 1 3/4 years down was June of 2013. That low there was 1179. Your second one was on the test. That was January 3rd of this year. That was 1181. Thus far, we got to 1208. The correlation inside the GLD is pretty dramatic, meaning the way that you're coming down. There's basically no sellers down at these lower levels. What you have with the GLD is that the swing point that we're going into has 109 million shares. That got tested in December with 63 million shares. We just did 35 million last week. So it's going to need a lot more to basically break out that bottom. Bond market. Let's go to oil first. CLV for oil. Oil's on its way to 85 bucks. This is going to be wild watching this baby shake out. CRB. So we take a look at the oil contract right now. Right now, you have oil down 89 cents. We're at 91.52. You're below the range, the trading range. Once you got back below 92.50 again, bottom line, this wants to get to 85 bucks. Gasoline, as we've been saying, it's going to be cheap, folks. This is going to be amazing watching this shake out. Gasoline is down 2.5 pennies today at $2.58 a barrel, not a barrel, a gallon. That's wholesale. The way that baby looks to be set up is that we're going to get down to $2.25. We take a look at the bond market. Bond market continues to basically want higher price, lower yield, TYZ4. So inside the bond market on Friday, we had bonds reject lower price with lighter volume, never made it to the swing point. That is an indication that, guess what? You're still going higher. We're at 124.10. In the 10-year, we'll see how she tries to attack ICE. ICE on this one is 124.29. 30-year bond, we take a look at the 30-year, and what you have with the 30-year bond is this, USZ4. With the 30-year bond, what you have is that you're up 9 ticks right now. You're at 136.08. That also basically came off the lows. Not real juice behind it, but rejected lower price, had lighter volume. We'll see how this attacks now, this 138.18 area. King dollar. What do you have for King dollar? King dollar is hanging at these highs up here. It went after the high again today. We got to 84.97. I expect you're going to see King dollar back off a bit. Why? Because what we've done, you've done 100% move over move. Bottom line is that it's time that she looks like she's going to take a rest. And if she doesn't take a rest, folks, we'll be at 89 in about a heartbeat. Bottom line is that she did exactly what it looked like it was going to do. ABC structure in the way up, all of the above. What is intriguing here inside King dollar is that King dollar wants to go to 89. It looks to me like it's a really sweet ABC structure in the way up. I suspect it's going to build some cause before we get up and over that, but 89 is on the agenda. And, of course, if 89 is on the agenda inside King dollar, it's like, okay, what are the metals going to do? My take on the metals is that the metals and King dollar is going to go higher. The King dollar, percentage-wise, does want to go higher. But as the King dollar takes a rest, what we'll see is that we'll see the metals stop moving. The bond market gets really intriguing, and this is why. If you saw an article in the Wall Street Journal today, this was a good article, too, and the correlation of, we talk a lot about the bonds in general and bonds across the world of what they're yielding, okay? So bottom line is that, as we walk through the yields in different countries, I'd always bring up the euro quite a bit. It's like, okay, so you're losing twice if you're buying yield over in Europe with the euro. Because the fact of the matter is that what you have in the United Kingdom right now, it's 2.4%. We're 2.5. France is 1.3. Germany's 1. Well, you're not only losing yield, you're losing on the correlation of King dollar going higher and the euro going lower. Well, you stay right there. We're going to talk about this when we come back. Dow Industrials right now down 111. Nasdaq off 55. S&Ps are off 19. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials right now down 109. NASDAQ is off 55. S&Ps are off 18.5. So when we're talking about the bond market, folks, this is one of these deals that heads they win and tails they win. And what it is specifically is this. Is that when we look at, so we're talking about the correlation of, okay, when you buy U.S. bonds, which there's right now more demand than supply, what you have is that you're buying them in U.S. dollars. You're getting paid the interest in U.S. dollars. The interest itself is more than almost every place, every developed place in the world. But now this comes the kicker, and this is the big kicker. because the dollar, folks, has gone so dramatically higher, and even with bonds, they've pulled back slightly, well, the correlation inside of that, when you look at the sovereign funds and the governments in Europe, Asia, they're up dramatically. The reason being is that we just go, if you want to see just how bizarre this is, you go over to the yen, and guess what? And this started right from the get-go. The Japanese government were the smartest, period. It's just amazing what they ended up pulling off. Because when the yen was coming off the bottom, meaning the strongest it's ever been, they piled into U.S. bonds. That's when the yen's at 76. Now you're at 108, right? The bottom line, even just the last 8 weeks, the yen just went from 102 to 108. Bottom line is this, is that it has been the best performing asset in the last quarter period. Bonds, our bonds. Okay, so it's a heads up in the correlation that where our bonds are going, number one, and my take is that numerically they're going higher. Yield, they're going lower. And if the dollar just takes a rest right now and then the dollar goes higher, guess what? That's all that matters. What matters is what gets put in the bottom line, and in the bottom line, they're going to be making money hand over fist because their currencies are getting weaker, ours is getting stronger, and if you have your currency, your asset in a strong currency, guess what? And for all you folks that are, all you tigers and tigresses up in Canada, bottom line, what you want to be doing ASAP is get your bread into U.S. dollars. That's the bottom line. What you have happening with Canada right now, if we bring the Canadian dollar up, what you're going to see, and this is going to get really wild because the correlation, you know, the Canadian dollar, when we bring this back, the Canadian dollar was at 160 when our dollar was at 121. Canadian dollar gets strong like bull, down to 90. During the financial crisis, it goes up to 120, pulls all the way back down to 94. It's at 110 right now. This little baby is making its way back up to 130, and that's going to be basically the line in the sand. You get over 130, guess what? That king dollar would be going back to 121. What would end up happening is that the Canadian dollar will be worth 70 cents on the dollar again. So, you know, for all our Canadian friends up there, you know, basically hedge yourself off, and particularly if you come into the United States. You know, we have a lot of inside the real estate fund. We have a lot of folks that come down to Florida in the winter, and it's really cool because what ends up happening, well, it's cool if they're paying for their stay now. I wouldn't be waiting. That's the bottom line. 877-927-6648. Let's go take a look at Royal Gold, RGLD. So Royal Gold out here is down $1.85 today. You're at 64.34, and we pull this back. We put this on a weekly basis. I still wouldn't be biting on this baby. You're at 64.34, 63.52 will get tested. It's coming into the strength that has been there since February 14th. The week of February 14th, the week of February 7th, and with lighter volume. What you need at this particular point is you need a rejection of lower price. That's what it comes down to. We haven't had it yet. The XAU is down 241. Light volume, no doubt about that, but bottom line is that you need a rejection of price. The first low in the XAU is 82.29. Right now you're at 84.54. You put this on a monthly... on a monthly basis, what you have is this. On a monthly basis, so we are at, let's see, the highs of the lows. Yeah, that's where we're coming into right now. The highs of the lows in December are 84.15. I expect we're going to get down there. That's in the XAU. The HUI, we take a look at the HUI, the Gold Bugs Index, and what you have with the Gold Bugs Index is right now we're at 202.69, and... that's saying that we're going to go right after the low. This is going to be this Gold Bugs Index is going to be interesting. So 201.65, we're going after it. You know, it's down $5 right now. You're right next to it. Being right next to it is saying, hey, guess what? You're going after it. So that's going to be intriguing. Watching how this does go after it. That's one Well, I see. No, let me put this on a monthly. Yeah, we're going after it. We're going after that. Yeah, we're into it. That's pretty intense. That is saying the HUI can actually get down to this 188.39 level, which is a long way down from here. It's another 12 points down from here. We take a look at the silver market, SIZ4. What we have with silver out here, silver right now comes down to 17.35. Man, they put some damage on this baby. Okay, so it was a spike down last night. SI1. Let me just put this on a continuous contract and see how this shapes up. So we'll put this on a continuous contract, and silver needs some help big time. So I wouldn't be touching silver unless it got inside this 1818 area, because it broke down from the last lows that were established in 2013. If we put this on a monthly, what you've set up now is that you're basically in another range. In the range that we'd be in right now, 1695 is game, 1465 is game, all of the above is game. So it's pretty intense. If we go look at the SLV, the ETF structure for that, we're at $17.06. You put this on a monthly basis. Okay, so last swing low had 284 million shares. Coming in with lighter volume, but the next swing point down here is, you get another $0.50 down, $0.50 to $1. So there's still some destruction in there. 877-927-6648. Alibaba, folks, it's going to be amazing if Alibaba called the high. This guy would just be amazing, just because the fact is, folks, if you hadn't heard it, is that Ma had called the high. Well, when I say called the high, when he did an IPO in Hong Kong, that was the high of the market. And they end up buying the whole IPO back. So they did the IPO. Stock pops the first day. Market crashes after that. This is the 2007 crash. Ends up buying all the shares back again. Does another IPO. And in this particular case, we'll see, but it's real possible that was it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials down 106. NASDAQ off 51. S&Ps are off 18. We're going to break back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials right now down 108. NASDAQ off 52. S&Ps are off 18.5. And as you come over to our website at TFNN, folks, what you're going to see is this. Right on the front page, you're going to see the $10,000 virtual trading competition. The competition itself is virtual. The $10,000 in cash, however, isn't. We're doing a $10,000 giveaway. That competition, folks, you can sign up for it right now. It's going to be on the Nadex platform. That you have until this coming Thursday at noon in order to sign up. It's free. The only people that can't participate in it if you're an employee of TFNN. What we're going to be doing is that as you sign up for it, you also get in the Tiger's Den, absolutely free. That's going to be 24 hours a day up until the contest is over. And then this Thursday evening, I'm going to be doing a webinar from 6 to 7 o'clock so you can understand the structure, number one, meaning the platform, and then we'll walk through some trades as to what I think you may or may not want to do inside that, looking at the currencies, looking at the commodities, looking at the indices. The first place prize is going to be $3,000. There's going to be plenty of prizes, by the way, too. You have first place $3,000, second place $1,500, third place $750, fourth and fifth $500. From 6 to 10 is $250. And then what we're also going to be doing is this. Each and every trading day, meaning the contest itself will start the following Sunday. So the contest starts on the 28th of September, goes through October 3rd. That Monday through Friday, we're going to be giving away 5 $100 cash prizes, and that is just for participating in the contest, folks. So check it out on the front page of TFNN. And don't let that Thursday fly by you. That's the real bottom line, because what will happen, it's not like you can be able to call the office and get in the deal. The reason being is that we have to get everything straightened out between Thursday night, Friday morning, Friday afternoon, so that we're ready to go on Sunday. Let's get a Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi there, Tom. How are you today?
I'm doing great. You having a good day out there?
Okay, that's okay. I wanted you to take a look at a income trust which trades the precious metals.
Okay.
It's ticker symbol M as in Michael, P as in Peter.UN. Century Select Precious Metals Fund.
MMP.
Yeah.
Okay, MMP.
It's like an ETF, but it's an income trust. It generates a yield.
I got it. Okay.
Well, 16.6%.
I got Magellan Midstream Partners for that.
No.
M. Mary P. Paul?
Yeah. On Toronto.
Oh, okay.
It's an income trust. So
MMP. I got it on Toronto. Okay. Different ball game. Okay, so I got it right here. Let's see. Okay, okay, so it's an investment trust. The trust seeks long-term capital appreciation, pays monthly cash dividends. The trust will invest heavily in actively traded managed consistent of metals and mining. Okay, so you're saying this trust right now pays 16%?
16.6% yield.
That's dangerous, right off the bat. Okay. The reason that's dangerous, folks, is this, is that nothing pays 16% and keeps paying that. And that's the first part. The second part is that in order to do that, the leverage they have to use inside this has to be incredible. Because what happens is that when a fund itself pays a dividend, period, most of the time that is borrowed money. In this particular case, if they're paying 16%, that's pretty intense, man. Let me just see something here. Okay, so let's see what we have. So inside of this funds, what I'm trying to look for here is that what are they holding? So their peer group, look at that yield. Oh my God, that's 16.22%.
They've got some debentures. They've invested in some debentures, so that's how they're funding the monthly dividend there.
Yeah, but they got
Real Alto.
They have some big leverage somewhere. Okay, so let's
Detour. It's Detour Gold, huh?
Yeah.
And Samafo.
Yeah, no, as we're going through this, folks, okay, it has to do with what is inside of this portfolio. You know, I can tell you, I wouldn't be buying it right now. And I don't know enough about it, Mike, but it really has to do with paying 16%. That isn't how it works. Do you know what I mean? So it's just, I don't know what they have, but I would make sure that I know what they have, because as soon as the people are buying it for 16%, as soon as they stop paying 16%, you know, you have a high volume low at 199, so we'll go test that. You know, so.
Okay. And it breaks to 199. Where are we heading?
Out of business.
Out of business, or October 2008 lows?
No, it's already below the October 2008 lows. Well, yeah, that was 263. We're at 259.
I have $1.05 intraday, October 2008.
I got 263. So.
Okay.
You know, you could be right. I'm just telling you what I have. So.
Yeah.
It's dangerous, man. It's dangerous.
Really? So if it breaks 199, you would basically sit on your hands.
I wouldn't be buying it right now. at all.
No.
This is what ends up happening. So let's walk through this a second, because this is always confusing. I'm telling you something. When these first come out, folks, I was trying to figure out myself. I run a fund, so I'm trying to figure out how do you pay dividends, right, when the fact of the matter is that you have to break in cash to bring the dividends. And then I realized that, okay, when a bank approaches you, it's like, hey, the bank will give you as much money as you want because they want you to leverage up dramatically, and that's where they want you to pay your dividend on a monthly basis or quarterly basis, whatever that is, okay? And to pay 16%, this company's got to be leveraged to the hilt because every one of the gold stocks and metal stocks that they have, we know are down. So it's like, okay, where are you getting the money? Well, they're getting the money from borrowing the money. And the real question is the borrowing aspect of this like leveraged 2 to 1, 3 to 1, 5 to 1? And you can find that out in the prospectus, but that's about it, man.
I see a debenture in there with a very high yield.
And that's possible. But a debenture, okay, is the bottom of the totem pole. A debenture, is the, let's say if you're borrowing money, what ends up happening is that the debenture, let's say there's 6 different forms of it, right? Okay. A debenture is the bottom form.
All right.
And most times, I've never seen debentures actually get paid. Yeah, they get paid yearly. They don't get paid monthly, but...
Okay.
Have a great one,
thank
man.
you.
Have a safe one. Let's go to Chenille in San Jose. Hey, Chenille, what's going on?
Hey, Tom, how are you doing?
I'm doing great, man. You having a good day out there?
Not too bad. I was hoping that, you have some movement in gold, but it's more on the downside.
Yes.
So I wanted to check, what you think about the Great Panther.
I'd buy it. I mean, we get stopped out of it today. We made 2 pennies, big deal, but I'd buy it.
Okay.
The spike, there was a spike this morning, folks, in Great Panther. Stock is down 89 cents, rejects that lower price. It's already back inside 102, and 92 is it's 102, and 92 is the number, and it has lighter volume. So, bottom line, this thing's going a lot higher.
And what do you think about GFI, Gold Seeds?
If we take a look at GFI, same deal. You're at 409. You get a high volume high up here at 483. So the setups are basically decent on both of them.
Okay.
Okay, man. Have a great one. Have a safe one.
Great. Thanks, Tom.
Thank you. Some of the Dow stocks out here, this is what you have happening. So Alibaba, they're holding up. BABA, Alibaba right now today is at 90.08. It got down to 89.50. Bottom line is that it's on the other side of that. And we'll see where this whole baby does shake out, meaning, let's just see something here for a second. So 89.50. Oh, I see. 1 second. So we get 2 days of trading under the belt thus far. Yeah, we'll see where it shakes out. Some of the high-volume stocks out here in a market that we're going to have some volume, but certainly not like the type of volume we had up at the highs on Friday. Yahoo right now is down at 223. You have Facebook off $1. Dresser Rand, that's getting taken over. That's up $2. Some of the Dow stocks, this is what we have inside the Dow stocks. You have Boeing down 66, Caterpillar's off $1.49, Disney's down 116. You get Honeywell off $1.78. Let's go see what's going on with Honeywell out there. So Honeywell, this is going to have to do with one of those takeovers. Yeah, she can't get it right now. Honeywell, that's in a consolidation. It's been in a consolidation for quite a while. Inside the NDX 100, what you have inside the NDX 100, taking juice out of it. Yahoo's the biggest mover, down 225. Baidu.com is off $9.90. TripAdvisor's off $3.80, and Tesla is down $9.47. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow Industrials right now down 94. NASDAQ is off 49. S&Ps are off 16. And don't forget about our trading contest, folks. You have from today until Thursday at noontime to sign up. It's a $10,000 giveaway, cash giveaway. All the details on the front page of TFNN. We go overseas, and we'll take a look at the... actually, you know, if we go overseas, folks, this is one of the first days that you actually have... all the indices in China were red last night. We had Shanghai down 1.7%. You had the Hang Seng off 1.4. Nikkei was off 0.7. Taiwan was flat. Over in Europe today, what you had is that you had the FTSE down 0.9%. The CAT was off 0.4. The DAX was off 0.5. You know, so right across the board, you have markets that were off. And as I said earlier, the thing that's pretty wild is that percentage-wise, these are not off a lot. NASDAQ's over 1%, 1.1, big deal, right? I mean, that's really not that much either. But point-wise, because they were at such high numbers, it's a little bit different. And that perception itself is going to be intriguing to watch how that plays out, meaning the Dow's down 103 points, which, you know, 100's 100, but that's only 0.6%, you know, so... small caps, as I said a little bit earlier, the Russell is screaming out here that it wants not only lower price, but what we've had thus far is this. Friday, Russell couldn't handle it at all. Goes south. Follow through out here today. When you do take a look at the correlation inside this Russell, right now the Russell is trading the exact same place that it was trading in December of 2011. That says something in itself. Why? Because that context is like, realistically, it should be making new highs when the other indices absolutely did make new highs. Now, the volume wasn't there, but the bottom line, it made the new high structure inside of that. If we go over to the FTSE in the UK and we take a look at the FTSE, that come down hard, 64 bucks. We won't get the volume until another couple hours. Ooh, hold it. Yeah. And now, check this out. This is pretty intense. This is always intense when this happens. Now, the FTSE in London, in the UK, folks, also had monster volume on Friday, but it couldn't break. It didn't even get to a swing point. You know, so this FTSE itself has been trying to break over this high, and when we're talking about, you know, trying to break over a high, we're talking about May of 2013. Hasn't been able to make it, and now what we'll actually have is it's already sticking out right now too. Is that you're sticking out. That you have a monthly bar that, if in fact it can't handle this high, you've tested the high, you have lighter volume, and you're going to come off that high with some juice to the downside. We go to the DAX in Germany. We take a look at Germany. Germany did the same thing. Germany went south. Germany hasn't been able to make that high out there. So we'll see how our own markets react, meaning some type of follow-through. I expect that you're going to get this follow-through. Bond market is screaming it wants higher price. If we look at the correlation of the volume characteristic inside the SPY, you have a slight expansion of volume, and we'll see whether they get that follow-through. Because what you're going, we are going to have happen tomorrow is this. We're going to challenge the swing low. The real question is are you going to get another rejection of lower price, as we did on the 15th of September. You know, we'd come down for 6 days in a row. You hit 198.38. It had 76 million shares and rejected that low. Goes topside last week. We're coming into that low today with 95 million shares. That means we're going to do about 100 million shares coming into that low. We haven't broken, got near the low yet. It's we've got near it. It's 198.38. Or, in fact, does it just jump the creek? Jump in the creek would be a huge indication that, guess what? This baby will go after the low that was generated out here in August 7th. Because what we still have set up right across these indices, if you put a channel line on these indices on basically a 3-year, 4-year weekly basis, what you have is been following this channel all the way up. And, smooth ride, no doubt about that. But what it hasn't been able to do, and this is pretty intense, actually, is that you have two separate lines. Each and every time that we hit the bottom of this line, it's bounced off it. But every time it is bounced off it, you have volume also. So the real question is going to be, does it break the trend line? Now, the trend line I'm talking about goes all the way back to November of 2012. Will it break that trend line with conviction? The thesis goes like this. When you come into trend lines and you have an expansion of volume, what it's doing is that it's taking a hammer and keeps breaking that apart and making it weaker, weaker, and weaker. So we'll see how this whole baby shakes out. I, no doubt, expect that it will break down. We go take a look at the financials. What you have with the financials out here today, really sideways move in the financials. Visa's the only one that's getting whacked a little. That's down 235 out here. She couldn't get up into her gap. The largest weighting structure inside the financials is still Berkshire Hathaway. Berkshire Hathaway is down $1.29 out here today. That's a long way to get back inside the lower range. Berkshire Hathaway is trading at 139. We'll have to come down to 129. So that's quite a way down. Goldman Sachs, which has had some nice volatility inside it, Goldman Sachs is off 82 cents. Let's take a look at Bank of America, BAC. Bank of America is hanging at these highs. We take a look at the whole sector with the XLF, and what you have inside the XLF is that's making its way back inside the 2358 area, which will put it inside a lower range. Volume's kind of light out here today, though. The XLF would have to basically get it to 2319 and have volume exceed 31 million. Now, we're at 31 million right now, so that's today. The real question is going to be, how does it attack that lower line? The oil and gas sector, the XLE, that is making its way down to the lows that were established in March. The XLE today is down 138. We have 9.6 million shares traded. On the daily basis, that's light volume. On the weekly basis, it looks like she's going to, let's see. Yeah, the last 2 weeks were big volume. 59 million shares 2 weeks ago. 59 million shares last week. We're at 92.42. So what the XLE is saying is that it's going to come back into the 88.71 area. That's quite a way down. That's quite a way down. You get back inside there, then that's going to open up 84.17. This is Tom O'Brien. This is TFNN. Don't forget about our $10,000 cash giveaway trading contest, folks. You only have until Thursday at noon to sign up. Right now, the Dow Industrial's down a 101. NASDAQ off 52. S&P's off 17.5. You stay right there, folks. We'll come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. If you happen to be watching Tiger TV, I have my coat on because I'm in my bear cave. It's actually, we're in a Class A building, folks, and it's actually like 60 degrees in here, and it's insane. Let's take a look at one of our quotes. Remember that there's a part of life which you are the explanation. Market-wise, let's take a look at it out here. We had the Dow Industrials down 107, NASDAQ off 52, S&P's off 17. Gold contract flat at $1,216 an ounce. Silver off 5 cents at $17.78 an ounce. Copper down 5 pennies at $3.04 a pound. Light sweet crude down 90 cents at $91.52 a barrel. Bonds. So you had the 10-year up 9 ticks at 124.09. The 30-year up 6 ticks at 136.25. Both the 10 and the 30-year bond, folks, had rejected lower price last Friday. Did it on lighter volume. go topside out here today. Both of them on higher price, a lot higher price, lower yield. King dollar, flat, 84.82. King dollar was at its high again today. I expect you're going to pull back off slightly. That's on a short-term basis. King dollar wants higher price. Euro, up 17 ticks at 128.47. Yen down 26 at 108.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is going to be so cool, folks, to see how this plays out. Because, you know, it's easy saying that something's going to ring the bell. And what seems to happen in the marketplace is that it's always some type of an event. You know, there's no doubt the event that we had on Friday was huge. Alibaba, largest IPO ever, $27 billion. Apple with the 6-0, and triple witching also. So what ends up happening? Well, we go to a higher high. Dow Industrials gets up to a price point of 17,350.64. Then the market gives it up. And we did that with $1.8 billion. So you can make a case, I can make the case, that you have a blow-off top. What wasn't quite there. So right now, you know, we'll find that out. And how we'll find that out is this. When you get a blow-off top, two different things end up happening. We definitely get the volume characteristics, meaning that the volume exploded up, even if it's option expiration, exploded up, gave it up in spades. You know, the NYSE was basically been doing $550, $600 million. All of a sudden, you do $1.8 billion. Gave it up. You come down right now, and today's a light day. Well, volume-wise, it isn't, okay? But bottom line is that you're down 107 points. That's nothing. We're at 17,172. First off, the Dow would have to get back inside 17,151. Now, you get that happening, and you get an expansion at volume all week long here, then what you have is this. You have a blow-off top, and you have volume off the high. So we'll see how this shakes out. Script is out there, though. Cash S&P, same number. Cash S&P got to a price point up here of 2019. Right now, we're at 1994. Now, the 1991.39, you get back inside that, that sets up a much larger 1904 number. NASDAQ Composite. Inside the Composite, what you have, same setup. The Composite did $3.1 billion. You come off that high. The first clue in the Composite is going to come down at the swing point. In fact, all the indices are going to be the same way. At the 15th, the September 15th swing point. Last week what we had done, we had come down to the September 15th swing point, and the NASDAQ Composite, that happens to be the 44.99 level. A rejected lower price, had lighter volume, go top side. We'll see how we run into that, because we're right next to it right now. That is only, That's 27 points on the NASDAQ Composite. The small caps have been leading the way down. NASDAQ basically is number 2. Small caps down $1.60 today. Small caps, if we look at the IWM, we're at 112. That wants 107. So the small caps are basically screaming, and many of the small caps are already in bearish territory. The bond market is so intriguing, it's amazing. You know, but even if you weren't a technical person, if I wasn't a technical person looking at bonds, fundamentally the setup is there, folks. Technically is there also, because they never even got to their swing point from the 31st of July. Fundamentally, they're there. Why? Because when you look across the world, the yields that we have right now are at 10 years at 2.5. Well, guess what? It doesn't matter whether you look. If you look at Germany, they'll pay you 1%. You look at France, they pay you 1.3%. You look at the United Kingdom, 2.4. You look at Sweden, 1.3. You look at Portugal, 3.5. You look at Spain. Spain's 2.3. But in that correlation, guess what? You're also looking at the euro. Anyone that's buying bonds in Europe right now or Asia is getting killed. They're getting killed not only on the yield, they're getting killed on the currency Why? Because the dollar has been going up so dramatically. Bottom line is that you could be buying bonds in Europe and in Asia, and the bond can go down, which it has the last 3 weeks, and you're still making money hand over fist. In fact, the last quarter, the bonds, even with our equity markets up, would have been the best investment out there, bar none. So it's about 7% for a quarter. And that has to do with the correlation that the currencies have moved so dramatically, meaning the dollar has moved up so dramatically, the euro has moved down so dramatically, the yen has moved down so dramatically. If we go over to King Dollar and we take a look at King Dollar right now, this is what you have happening. King Dollar, DXZ4. So what King Dollar has done, this is the fourth day in a row that it's basically hanging at its highs up here. We're at 84.79. It hit 84.97 once again. We did 18,000 contracts, and, we'll see whether this baby wants to just blow away this B point right now. I do expect there's an ABC structure in the way up. I suspect somehow this thing wants to back off a bit. We'll find out. That's on a short-term basis. The way this is acting is that it looks that it's going to be an ABC structure on the way up. That ABC structure would take it up to the 89 level, and we'll see what ends up happening up at that 89 level. When we're looking at it, yeah, that could take another 89. Hey, we'll see whether it's 3 or 4 or 5 months. It's been certainly building up cause, and it wants higher price. And when you take a look at the euro, if we bring the euro up, what you do have inside the euro is the euro wants a lot lower price. We're all going to be partying and vacationing in the Amalfi Coast pretty soon, because bottom line is that the euro right now is at 128. That wants to run down to 118. Now, what is different? Now, this is what's really wild. Oh, boy. Okay, inside the euro, I was just walking through the dollar saying, okay, isn't an ABC up? Isn't not? It wants to take a rest. When you look at the euro, it's like, man, it looks like the euro doesn't want to take a rest. Right now, at 128, it looks like the euro can basically, without breathing, get down to 118. If that's the case, then we're going to 189 ASAP. That's on a shorter-term basis. On a longer-term basis, what you do have, if the euro breaks the 123 level, it's all over. You break the 123 level, and guess what? You're not only at par, you're down to 85 cents in the euro. That would be that would be pretty heavy, man. 877-927-6648. Let's go take a look at inside the NDX, what was moving the NDX out here today. What was taking it south, you had Yahoo down 228. We had Baidu.com off $10. You had TripAdvisor off $4. You had Tesla down $9.29. Putting some juice into it, you had Sigma Aldrich. That was a takeover. That was up $34. Merck is taking that over, the German company. Monster.com, Monster Beverage was up $2.60. You had Qualcomm up 76 cents, and Vertex Pharmaceutical was up 96 cents. If we go over to the IBB, inside the NASDAQ Biotech ETF, the IBB hasn't even rolled over yet, folks, and the NASDAQ was down over 1%. The IBB is down $2.68. And when that IBB rolls, which is close to rolling, get out of the way. The NASDAQ is just going to get roasted, toasted, and all of the above. You stay right there, folks. Tigress, Amy Smith from IBD is coming right up.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 107, NASDAQ off 52, S&P's off 17.5. And as we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from IBD. And folks, if you haven't test drove, whether it's the digital platform at investors.com or the print edition of Investor Business Daily, you can do it right here, right now by coming over to our website at TFNN. Go on the right-hand side, you'll see the banner. Hit that banner. You can take your choice and go with the paper or go right on the website. I suggest you do the website because, of course, you're listening right on the web, and the bottom line is that there's a lot of great tools you can use out there each and every day. And what is happening with the investors.com right now is that it's free access week. And, Amy, we're going to talk to Amy about that, but it's a great little deal. Amy Smith, what's going on?
Hey, Mr. Tom. Everything's great. How are you?
I'm doing good. Good. Yeah. So, market-wise, we got some distribution days out here, I guess, huh?
We do. You know what? Actually, to tell you the truth, today, really, we're under some selling pressure. There's no doubt about it. You take a look at Tesla, Chipotle, Netflix, Baidu, Under Armour, the list kind of goes on. They're getting hit. Some today we're seeing some weakness, and those were stocks that were holding up pretty well. And even after all the Alibaba, hoopla on Friday, if you take a look at the Russell 2000 with the small caps, and I'm sure you have been looking at it.
Yeah, that's pretty
really weak.
Right, no doubt.
And that's definitely not good for the market. Here's another little interesting statistic as running all my screens and everything.
Yes.
We have not even had a 10% correction since 2011. Now, we've had 708 trading days and no real meaningful correction. I'm not, we're not going to predict here, but the Fed just pulled another $10 billion off the market that had been going into the bond buying program. We're at a point where we're a little bit long in the tooth. We haven't gotten a correction for a while. It is possible, we'll see, but we'll get into earnings season again October the 8th with Alcoa. Maybe that will give the market, kind of a jolt that we need, but I would not be surprised at this juncture to see us pull back a little bit.
Yeah, it's interesting because I see the statistic here, and I guess, so we're at 708 trading days, but I guess before that, from May of 2003 to November of 2007, we actually went 1,132 days without a 10% correction?
Which is amazing. So what we could get, Tom, honestly, if we get these good earnings numbers that start up again, we could run this thing till the end of the year. We get the Santa Claus rally and everything. It's very possible. I think it is going to depend on what happens with earnings. The market kind of had a snoozer over the Scotland vote. That sort of came and went, and okay, it's finished with. The Fed came out, said they weren't going to raise any interest rates. Okay, that's done. So now when you see this market weakness, of course, today we had weakness because we got news out of China. And, when we see things sort of weakening in China, the market's getting really scared there because that's where they're thinking growth is going to come out of. By the way, there's going to be a manufacturing number out of China tomorrow. We'll have to see what that looks like because today the Chinese stocks really got whacked.
Yeah, and if you actually go over, folks, and you look at the Shanghai is in tough shape. It has been in tough shape for a long period of time.
It is. And, the SXI, which is the ETF that follows, the Chinese, is looking really, really weak. That's the ETF, Chinese ETF.
Yes.
So, I don't know. I mean, everyone, Alibaba slumped today, and again, that was probably based on those numbers that came out of China. So we'll have to wait and see. We'll wait if we get and see support or not.
Now, we look at the IBD 50. Do we have setups, buying setups that we look like a setting up, or what are we looking at?
Well, it's so funny, Tom. When I was writing my script earlier, we thought we had some setups, and things changed.
They got destroyed. Oh my God, that's terrible. Yeah,
we have Facebook is still looking fine. That one's looking okay. Under Armour, they just signed Giselle, however you say her name, that model. Married to Tom Brady. This one dropped beneath the 50-day moving average. It had been holding in a pretty nice tight price range. So that one kind of looks technically weak now. Yeah. And we have Jazz Pharmaceuticals. I'm kind of really pushing it to try to find some great setups.
Yes.
And that's telling me something about the overall market.
That's right, because what happens, folks, what Amy's saying, you don't want to be pushing it in the market period to find something. And most of the time they're screaming at you, especially those IBD setups, right? I mean,
that's right.
Sure.
And you know what? We want to make our money. Someone told me something kind of funny, like pretend there's a bag of money over there in the corner.
Okay.
And there's certain times of the year or in the market you can go over and grab that money, and that money's yours. But you're not going to be able to go over into that corner and grab the bag of money every day.
That's a fact. That's a great saying. So let's talk beauty. Ulta Salon.
Ulta, yeah.
Ulta, yeah.
It's Ulta Salon. You're right. The ticker symbol is ULTA. I don't know. I've got to go in one of these and investigate. What's interesting here is they had a couple of quarters of some weakness. They were slowing down financially, and they've decided they're going to do something to turn that around. They got in some new products, and they brought in new beauty brands to help increase customer traffic. And I'll tell you, I think this is an incredibly ambitious plan. They're going to roll out 100 new stores a year. Yes. That's a lot, Tom.
It's a lot, and there's a lot of money in that beauty business, though. Listen to this. This is a great story. It's just we were out the other night, and my girlfriend's girlfriend, she's saying, yeah, she just came back from Malta, right? And I said to her, I says, this was after the earnings. I said, so what do you buy there, right? And the bottom line is that there were a couple of women there, and they said that every time there's something that they love. I forget what it was, okay? But the bottom line is that every single time, if they don't, I guess they get their supplies in on a Tuesday, okay? And if they don't get there on the Tuesday, there's a certain eyeliner and certain something else that they're out of. Okay.
Wow.
And it's like I was saying, oh man, this is like the Apple deal. Do you know what I mean? They, so there's something there. That's for sure. And we know that the price is there. What happens is, beauty products are expensive, period, you know.
Yeah, and they sell fragrances, they sell makeup, they even sell, it's so funny, if you can get in touch with your femininity, they do sell men's things also, if you want to go in one of the stores. I just don't see you walking into something that says Ulta Beauty.
You know, oh, my God. Hey, you never know.
You never know. Now, we're going to find out more of their details. The one thing they have not said yet in their earnings report, their full expansion, rolling it out, how they're going to do it, these 100 new stores. They're going to reveal that October 15th. So let's see what the company says. But, certainly the price action that we see in it is that it went up. Investors liked it. It gapped up in price. And as you say, they have all these, different beauty products for your hair and all kinds of stuff. So my only problem when I go in those places, Tom, there's too much.
You buy too much. I love it.
Well, then I don't know. There's too many choices. It's like when you go into a clothing store and there's too many choices. I'm better if you stick me in a smaller store.
Yes.
There's not as many choices, and then I can figure it out. Because I'll go, look at this lip gloss. Oh, no, look at this one. Look, I just get lost with too many choices.
Makes sense. Hey, talk to me about the open access so the folks can get over there.
Yeah, you know what? Just go over to investors.com. You can basically sample everything for free, which is kind of cool.
Sure.
If you've never sampled our stuff, you can take a look at the big pick. We've got the screen center. We've got 5 different screens that help you focus in on the market leaders. There's stock checkup. You can take a look and see how a stock's ratings are, and then we have stocks on the move. So the whole thing's free. Just go take a look at it at investors.com.
Amy Smith, thank you so much. You have a great week, safe week. We look forward to speaking to you right back here next Monday.
Oh, thanks. You too, Tom.
Thank
Take care.
It's Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. We're down, finished down 107. Nasdaq off 52. S&P's off 17.5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 107, NASDAQ off 52, S&P's up 17.5. And as we do each and every Monday at 35 past the second hour, we have our man, Mr. Chad Coco. Chad does an outstanding show right here at TFNN every Tuesday, folks, 12 to 1 Eastern Standard Time. It's the Option Hour, sponsored by TD Ameritrade, Think or Swim. Now, if you haven't test drove their platform yet, come over to our website at TFNN. You'll see the banner on the very top, on the side. You can hit that banner, bring the platform up. They'll let you trade with paper money. It's an outstanding platform. I use it each and every trading day, whether I'm doing options, equities, currencies, or futures. It's all on one platform. Chad Coco, what's going on?
How's it going?
How you doing, man?
Pretty good.
Well, you know, it's going to get intriguing here, is that when are they going to come out? And we get so many calls. It was a trip on Friday, man. So many people. Well, I say so many. I got 3 calls within 2 hours about options on Alibaba.
Yeah, so they're talking about the 29th those will be listed. So
yeah, well, that's quick, man.
Yeah, real quick. You used to have to wait a month, and they got it down to 2 weeks. Now we're in a little over a week to get options on an IPO. It's pretty nice. You guys got to be excited then, man, because there's going to be some big action in that. I mean, definitely, yeah. So it already was a huge volume gain for us here, and with the options, you can only imagine what's going to happen. Yeah, no doubt. And of course, what we have is that you get volatility back in the marketplace. What's intriguing is that the Dow's off $100, but percentage-wise, that's not a lot of numbers, not a lot because we're at such high numbers. That's 0.6%, right? Yeah, really, not much. The percentage doesn't seem a whole lot because we are trading so high. What I thought was kind of interesting, so the market is down 1% across the board pretty much. Yes. The VIX went up 13%. Yeah. Usually that moves quite a bit more with a 1% move in the market. Does it? Interesting. Okay, that's cool to know, man. Okay. I think that has something to do with that. If you look at gold didn't move at all at the close, so it may have something to do with that. There's not a whole lot of hedging going on that. Yeah, listen, I guess, hey, can we talk a little bit about, when we
this option expiration, we had some monster volume, man. I mean, 1.8 come in the NYSE and 3.1 come in the NASDAQ. So after the option expiration, of course, you know, the bigger funds, I mean, they start putting all their hedges on again or roll them out.
Right. Typically, those will be rolled a couple days before expiration.
Okay. And so then basically the whole thing starts all over again, meaning that how many calls you have, how many puts you have, and who's delta neutral, and, you know, and that what that has to do with, folks, has to do with where the supply and demand is basically for the next 3 or 4 weeks. So it's pretty intense as to how many positions the folks are actually putting on.
Exactly.
You know, so when we look at this time of the year, I guess between now and November, I mean, Thanksgiving, this is the time of the year that we absolutely could get some volatility before a rally. Or how do you look at this time of the year, or do you look at it at all?
Well, yeah, definitely look at it, because this is where a lot of the manufacturers and the shipping partners out of various different parts of the world are talking about their numbers coming up into the holiday season, so you can get kind of an idea of pre-holiday season numbers, what those are going to look like from what happens over the next couple of months or the next month or so from here.
Right, and I guess inside the market in general, but inside the option market, Apple's going to be a big number, right? Because, you know, what's intriguing, Chad, is that Apple still is hanging at these highs, but, you know, we haven't had a lot of movement in Apple.
Right, yeah, it kind of surprised me too. So with their announcement of their iPhone being biggest sales ever, and barely moved the stock at all.
Yeah, interesting. So what are we going to be talking about on the show tomorrow?
We're going to go over a couple more strategies using the platform to scan for and find some trading opportunities.
Nice. And listen, folks, it's right here at TFNN, noontime to 1 o'clock. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. Starts at 8 o'clock in the morning, goes live until 6 o'clock in the afternoon. Bottom line, get it right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, just hit tfnn.com. You'll see the TV on the right-hand corner. Hit that. You can get the audio, plus you can get the video. Chad, you have a great night, safe night. Of course, we look forward to the show tomorrow.
You as well. Nice talking to you.
Okay, man. Have a great one. Have a safe one. ASNA. Let's take a look at what we have here. This is, you know, Chad was just talking about retail. Well, here's a chain of women's clothing stores. It closed at $16.53. That is trading at $14. That's getting hit. That's down $2.50. That's a big number, and someone already knew it. This is a high volume lower. This is a trip. Let's watch this, how this baby shakes out. What is this going to blow away its lows? Let's take a look. Yeah, it is. Okay, so let me bring this back here for a second. Put this. Oh, this is trouble in paradise. Okay, so you have 14. Oh, yeah, amazing. Okay, so I'll put this on a monthly. I got to keep going back to find out just how bad this is. And it's bad. Okay, so you've been at a high. This is a classic, too. You've been at a high. You come off the high with volume. We've been at a high now going all the way back from, oh, my God, 2 years. This is big distribution. So you're at a high for 2 years. Consolidation, you blow the swing point away. The swing point is $15.95. This thing, I think I just said $14.20. At $14.20, what it's going to do is go right after its high of 2006. And we'll see what kind of volume we get as we go down there. Right now, yeah, well, actually, oh, my God, it's going to blow that away. This thing's going to go right inside. This is going to be amazing watching this shake out. Now, this is something, folks, you want to take a look at, because 1405, unbelievable. It's going to go right back to the high of 2006, which it took out with light volume. So in the matter of, that's pretty intense, we're 2014. So let's see what they have to say. So let's see. Trading resumes. So they just started. We got one-liners that are coming across just yet. Let's see. ASNA. So this is Lane Bryant, Dress Barn. Okay, they saw 1608. They saw shares. They saw an estimate of $1.24. Now they see 90 cents to $1. That's pretty intense. It says, based on comp sales unchanged and modestly up, shares halted pending wider dissemination. The earnings per share, yeah, this is a big number. Their net sales, the estimate was $1.2 billion. They're figuring fourth quarter net sales is going to be $1.1 billion. Their comp stores are down 2%. They expected them to be up 0.4%. This equity is going to be in big trouble. Now, what that will do, I'm not sure if we'll hit the rest of them because most of the stores that they have there don't look to me like they're big numbers. But what we will have is that the destruction inside that retail area has been pretty intense. If we go over to Alibaba for a second, what we do have at Alibaba, BABA, is this. Alibaba right now is closed at, I think, at $89.90. We got to go back to, yeah, $89.89. Now, that's not the end of the world. Tomorrow, it's going to go after this $89.50 once again because we had that high volume low this morning at 11:10. And the real key is going to be, does Alibaba, number one, well, did it, number one, ring the bell at the high? I can't even imagine what the percentage is that Jack Ma rang the bell in 2007 in Hong Kong, and meaning that was the high of the market, bought the shares back, and if he does the same thing again, it's going to be a total mind blow, because what are the odds of that? Bottom line is that BABA, when we take a look at it, it went off at $68. You know, of course, it opened much higher. Yeah, $68 was the offering price. 368 million shares were pushed out there. Big numbers, no doubt about it. And, hey, we'll see whether it makes its way back to $68. What is going to be intriguing is, as Chad just said, is that the options will start trading, I believe he said, the 29th. There'll be a lot of action in those options. And who knows? Bottom line is that if it gets out to a lower price, we'll see what the premium on those options are. Herbalife was down $4.62 out here today. This is look at this. This is with some juice also. This is some heavy juice. Herbalife out here. We put this back on a monthly basis. What you're going to see, here's a classic. High volume low. This has been the battle that's been going on. So between Icon, I believe, let's just see if Icon's still into this. I believe that's the battle, right? So Herbalife's down 10% out here today. Yeah, it is. It is the battle. 114 PHDC. This is going to be pretty intense, actually. Yeah, Icon Associates owns 17 million shares, and Kyle makes a lot of money. There's no doubt about it. But this is an equity that has just got cut in half in the last, looks like, 15 weeks. Oh, not even 15 weeks. Man, that was quick. You stay right there. We'll come right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And, folks, don't forget, at TFNN, we're giving $10,000 in cash away. We're having a trading contest. It's a virtual trading contest on the Nadex platform. You have until this coming Thursday at noontime to sign up. It's absolutely free. Come over to our website at TFNN. The contest itself is going to start on the 28th of September, which is a Sunday afternoon, and go until the 3rd of October. That is a Friday. First place is $3,000, then $1,500 and $750, $500 for a couple, and then $250 for the next 5 after that. And then we're going to give away $500 per day just for trading. That's going to be a random deal Monday through Friday. Check it out, the front page of TFNN. You have absolutely nothing to lose and everything to gain. After the close out here, well, actually, let's go to Herbalife for a second. We're just talking about this is the great battle between Kyle Icahn and what is the other guy? It's so funny because it's the other hedge fund manager is Econ. Yeah. No. Bottom line is that Kyle Icahn's not winning in this battle right now. He owns 17 million shares, and the stock, okay, and I believe the way that the other hedge fund manager is playing it is that he's playing it in the option market, I believe, and I think he did double down on the deal because the stock had already gone down to the low in 2012 to 24 bucks. Went all the way back up to 83. And if you remember, David Icahn, thank you very much. Thanks, Dave. It goes all the way up to $83. And what had happened, folks, is that he did this big PR piece saying that he was going to show that just what type of fraud this is, because he's saying it's a fraud. It's a multi-marketing fraud. Ponzi scheme, that's what he's saying, basically. And no, I guess no, Ponzi scheme would be the wrong word, I believe. No, it would be, I believe it's the multi-marketing deal. That, well, anyway, what had happened when he did the workshop is that the stock ended up pyramid scheme. That's right, pyramids, right. Okay, so it went from $44 to $66. It went just the opposite way, folks. It goes up, okay? Makes a high out here in January and then of 81, and now it's 40. So it took 9 months to get down here. Now, this is a classic because this is a high-volume low at $24. So it's going to go after $24. The real key is going to be, does it break 24 and does it have juice behind the move? And the way that the filings are still saying, it's saying that Kyle Icahn still has 17 million shares. So that's pretty intense. We take another look at a couple more high flyers. One of them was Workday. That was down $5 today. And Workday, this is an equity that had gone dramatically higher. Did basically a dead cat bounce. We had gone to $116, gets down to $64, just ran up to $94 and just gave up $10 in a couple weeks. This one here is pretty intense. This is CRR, and what CRR is, this is Cabo Ceramics. They produce and supply ceramic and the oil and gas business. The low of this is today. It's $67. The high, this is amazing on this one. The high, folks, was double that price, more than double that price, and it was only, we're talking about July 1st. $156 to $67. This equity went in all of, 2 months. What you have here, it blew away a B point, did it with volume. We take a look at this and you put this on a weekly basis. Well, actually, we'll put it on a monthly basis. You put it on a monthly basis, personality stock extraordinaire. The stock had gone from $61 all the way up to $156, hit $156, as I said, July 31st. Comes off that with vicious volume. This equity, so your swing point on this is 61, but the way this thing is trading, this thing is going to be coming down to $26, and that is devastation in a huge way, because you're talking about 151 to 26, and if it trades like it's been trading lately, it's down $13 today, or 20%. The way this is trading, this thing could hit $26 very quickly. Let's see what they're saying out here. So, oh, interesting. So check this out. This is saying that Cabo Ceramics, the largest supplier of synthetic materials used in fracking, fell the most in more than 2 years after saying that sales of the proponents fell as oil and gas producers used more natural sand. Cabo dropped 17% to $70.05 today at $106. Sales of the ceramic proponent will fall 18% in the third quarter. In the previous quarter period, it will match the first quarter levels. The Houston, well, they're saying, they came out and flat out said that their sales are going to fall 18%. And as that was saying, 18%, they took that stock down 20%. So that's pretty intense. There's no doubt about that. When we take a look at the markets out here, what we're going to be looking for tonight, folks, is this. Right across the world out here today, you had the Asia down last night. We had Europe down today. Our markets were down, not dramatically, but they were all down. I expect if we go over to the Hang Seng, we take a look at the Hang Seng, you're going to get some follow through there. Hang Seng was off $350 last night, and you had juice behind the move. We're at 23,900. The Hang Seng only has to come down about another 600, and then that's going to open up 2,100, and that's going to be a big hit because it started at 25,000 4 weeks ago. Two weeks ago. The Nikkei in Japan, we take a look at the Nikkei in Japan. What you have with Japan, that was flat market last night, and that's because the yen is so strong. Shanghai, however, down. Over in Europe, you had the FTSE come lower, dramatically lower, too, by the way. FTSE came down hard out here today, down $64, which is just over 1%. Percentage-wise, because we are at such high numbers, it's not like the Dow was down a lot. NASDAQ was the one big one out there today. The small caps were. NASDAQ was down 1.1%. The S&Ps were only off 0.8%. What I expect you're going to see out here, though, and it will be interesting seeing if, in fact, we get into this lower swing point. This is the swing point that we're coming into, and I expect we're going to get into it tomorrow, folks, is this. On the cash S&P, it's 1978. So it's, basically what, 84. You get about another 16 points. So we're down 16 points today. It's another 16 points. That's going to be crucial. Why? Because that's where we rejected lower price last week on the 15th. It had lighter volume. You go topside. That price also, 3 points lower in the S&P get you in the lower range. So your benchmark, though, is this 1978 area. Always remember, folks, whatever you think about, you bring about. Whatever you're focused on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow. Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.